Welcome to Lesson 7 of Financial Accounting, and here we will discuss Chapter 11, which presents a discussion of proprietorships, partnerships, and corporations. We begin with a description of each of these three forms of business organization. Our main focus will be on the corporation. Key to the formation of a corporation are the Articles of Incorporation and the Corporate Charter. These are public documents that are issued by the states to establish the legal existence of the corporation. Only a few laws regulate the operation of proprietorships and partnerships. Corporations, however, are heavily regulated. Ownership in a corporation is evidenced by stock certificates called shares. A closely held corporation is one for which the stock trading is done between individuals only. A publicly held corporation has its shares for sale to the general public through stockbrokers who are members of an exchange like the New York Exchange or the American Stock Exchange or the over-the-counter exchange known as the OTC. Extensive regulation of stocks began after the stock market crash of 1929 and during the subsequent Great Depression. More recently, following the dot-com crash at the turn of the century, this brought on further regulation in the form of the Sarbanes-Oxley Act of 2001. One drawback to corporate business is the double taxation of income. Corporate income is taxed when earned, and then dividends from this income are taxed from the individual stockholders when they are paid out. The Chapter S corporation was invented to ease this situation for the owner by taxing at the individual rate and only once. Key advantages of corporate business are limited liability, continuity beyond the lives of the owners, ease of transfer of ownership, advanced management structure, and the ability to raise large amounts of capital. We now introduce accounting for capital stock. Concepts included here include par value, stated value, and other valuation terminology. Stock is categorized as authorized, issued, outstanding, and treasury stock. Classes of stock include common and preferred. Included are procedures for recording dividends, stock splits, and the appropriation of retained earnings. The price-earnings ratio is also discussed here, along with price increases and decreases. The chapter closes with control of the business through majority stock ownership. The 10K financial statements are briefly mentioned as well. In class, we will examine the financial statements of some selected firms and discuss the various sections of the 10K report and how it aids investors wishing to purchase a stock that is a sound investment. For the last week, we will examine the statement of cash flows and its importance to running a business. If time permits, we may discuss investing in stocks as a wealth-building activity. Be sure you review your grade status by completing any unfinished assignments and/or quizzes. This will be our last opportunity since next week, final week, will be over suddenly and grades due, so I will not be accepting adjustments after the end of this week. Taking a look at Lesson 7, we have a number of learning objectives here, 5 in total, identifying the primary characteristics of the three forms of business organization. You should be able to explain how the different types of capital stock affect the financial statements. We want you to understand how treasury stock transactions affect the financial statements. Fourthly, we want to explain how dividends, stock splits, and other appropriations affect the financial statements. And lastly, we want you to be able to explain, understand, and explain the uses of accounting information in making stock investment decisions. The chapter exercises are all from Chapter 11, and we'll be doing in class problems number 1, 2, 4, 10, 11, and 18. We'll take a brief look at the comprehensive problem, but will not assign it to you. If we can finish everything, of course, you'll be able to indicate that it was all discussed in class. Looking forward to seeing you, and again, looking forward